Okay, yeah, let's unpack that feeling. It really captures what a lot of people are wondering right now, doesn't it?
It really does.
And it's the perfect jumping off point for our deep dive today. We're aiming to go way beyond just Bitcoin's price action.
Exactly. We're looking at the bigger picture, these major economic forces, the
Yeah.
unexpected shifts happening.
And how it all connects, right? Our guide here is this really illuminating conversation with Jordy Visser, the market expert from Anthony Pompliano's channel. It sheds light on some huge trends.
hmm And our mission, really,
Yeah.
is to connect these dots for you.
Right.
They might seem separate. The Fed's philosophy, AI's impact, this manufacturing comeback.
But they're not separate at all.
Not at all. We want to explore not just what's happening, but critically, why it matters to how you understand the economy and, well, your own financial situation.
So let's kick things off with this idea of the academic Fed, something Jordy Visser talked about. We've heard critiques from people like Scott Bessent, even Donald Trump weighed in. What does that actually mean, calling the Fed academic, and why is it drawing so much fire now?
Right. So basically, the critique suggests the Fed is maybe too focused on backward-looking data. Recent CPI reports, past job numbers.
Stuff that's already happened.
Exactly. Instead of maybe looking more at forward-looking trends, future indicators, it's kind of like, well, think about how analysts value stocks. They look at future potential, right? Discounted future cash flows.
Not just last quarter's earnings report.
Precisely.
Yeah.
So the analogy that gets used, it's like trying to drive a really fast futuristic car
Yeah.
by only looking in the rearview mirror. That's the picture painted of the academic Fed trying to make policy for this exponentially changing world.
That's a powerful image. And it really highlights the bind they're in with that dual mandate inflation versus jobs. Especially now, with AI moving so fast and already impacting employment, it feels like a crossroads.
It does. You've got fiscal policy pushing hard, the AI action plan, government spending.
And then this push from some, maybe even the administration, for monetary policy to, quote, run hot.
Right, meaning they might tolerate inflation above, say, 3% for a while, just to keep growth humming.
To prioritize growth.
Yeah. It feels a bit like 2007, 2008, doesn't it?
Right.
When policy shifted alongside that big innovation wave back then, it was software, smartphones.
Now it's AI.
Now it's AI. And this brings up a really key point about inflation. Everyone experiences it differently,
Totally. My grocery bill versus your rent versus healthcare costs.
Exactly. So a one-size-fits-all policy is super tough, especially when things like education, healthcare, housing, they just keep getting more expensive for most people, that sticky inflation.
So for you listening, a Fed focused maybe too much on the past. What's the risk?
Well, the risk is they miss the turn. They could react too late to shifts.
Yeah.
And that impacts your job security, how much things cost day to day, and ultimately the real value of your savings.
Okay, and that leads us right into maybe the biggest thing the Fed might be, well, underestimating, the deflationary power of AI.
Oh, absolutely. This is huge. And it's not just about software anymore. That's the key shift. We're talking embodiment.
Embodiment, meaning physical robots.
Physical robots, humanoids, the source mentioned, 1X's robot carrying beers, Figure AI's folding laundry. These aren't just cool demos.
No.
These are potential digital employees. Think about building houses with robots cheaper, 24/7 work, no health insurance needed, or AI agents just handling tons of admin tasks.
Wiping out entire job categories potentially?
Potentially, yes.
Yeah.
Or radically changing them. It's like, imagine AI as this incredibly strong silent current flowing beneath the economic surface. Right now, we feel the choppy waves of inflation on top. But underneath, this AI current could eventually just pull the whole price level down. It changes the game for companies' pricing power, and eventually they might pass savings on to you.
That metaphor really nails it, these deep currents. And it's not just the big robots, right? It's also the tools.
Exactly. The innovation at the tool level. Like the example of someone building a working voice assistant in under a day using AI tools.
Incredible.
It empowers millions of people to create things, to basically spin up digital workers almost instantly. That's massively disruptive to traditional labor. Things that took teams of coders now take, well, much less.
So what's the timeline here? Are we talking next year or?
Well, probably not next year for widespread use. AGI might be 4 or 5 years off. Maybe humanoids are more like 2030 plus for mass deployment.
And
but
the impact is starting now.
it seems so.
Yeah.
Look at S&P 500 earnings, surprising to the upside. A lot of that is likely efficiency gains, maybe from early AI adoption. But yeah, this acceleration will disrupt jobs. It's a huge give and take for society.
Makes you think, doesn't it? What parts of your daily routine, your job, could a digital worker or robot do in, say, 5 or 10 years? How does that change things?
It really does. Productivity, costs, your career path,
Yeah.
it's all potentially up for grabs.
Okay, let's shift gears slightly. How does all this feed into the wider economy and maybe where investments are headed? Let's talk PMI, the Purchasing Managers Index. It's showing something big.
Right. So the PMI, just quickly, it's a survey, tracks manufacturing health. Above 50 means expansion, below 50 contraction. It's a really important indicator.
And it's been surging
Yeah.
globally.
Yeah, surprisingly so,
Hmm.
especially after the U.S. manufacturing sector was stuck below 50 since, what, early 2022? Now we're seeing this strong rebound.
Which is interesting because the narrative for years, especially post-2009, was the world getting less physical, right? All software, GPS becomes CarPlay, cameras merge into phones.
Totally. Software ate the world, as they say. But now,
Yeah.
now it feels like hardware starts to overwhelm software.
Why not?
Well, partly because AI itself is disrupting software development, making code easier to generate. But mainly, think about what AI needs.
Infrastructure.
Massive infrastructure. Data centers, power grids, drones, the humanoids themselves. All that requires physical stuff. Manufacturing. Building things.
And this isn't just wishful thinking in the surveys. There's real evidence.
Seems like it. The source pointed to actual proxies. Data center construction is booming, like about to overtake commercial real estate construction. Power stocks are up. Companies like Siemens reporting huge backlogs, 5 years sometimes.
Wow.
And it's global, too. PMI is up sharply in Europe, India, Japan. It feels like a broad shift.
So if you're thinking about your investments,
Hmm.
what does a PMI surge like this usual mean?
Historically, it often signals a rotation. Not necessarily a market crash, but a shift, the undervalued stuff.
The 10 PE stocks, price to earnings of 10, often in physical industries.
Exactly. They start to catch up to the really expensive 35 PE stocks, the software, the AI darlings. It suggests maybe a longer-term secular change is underway, driven by the need to build all this AI plumbing.
So the question for you listening is, are your investments still weighted towards that software world, or are you thinking about this potential shift to hardware and infrastructure?
It's a key question right now.
Okay, so weaving all this together, back to the start. Why isn't Bitcoin going up? How does this all connect?
Well, the source mentions its beta side to tech, meaning it often moves with the big tech names. When the air comes out of the, quote, AI bubble momentum trade, or there's uncertainty about rates.
Bitcoin tends to pull back too.
It often does, yeah. We saw that correlation. But interestingly, rising PMIs, historically, that's actually been a good environment for Bitcoin.
Really? Yeah.
And think about it. If the Mag 7 tech giants start to stumble Apple, Tesla facing physical world issues like tariffs or supply chains, others may be facing questions about AI's actual return on investment.
Investors looking for that tech-like growth or beta?
You might look toward Bitcoin as an alternative. Yeah.
Interesting angle. And speaking of rates and real-time shifts, we just got that update from the Fed at Jackson Hole. Jerome Powell's comments seemed significant.
Very significant. Adam Kobetsi's summary highlighted key phrases. Shifting balance of risks. Downside risk to employment rising. Labor supply softened.
And crucially, abandoning flexible average inflation targeting. That's a big policy change, isn't it? Dropping the idea of letting inflation run hot to make up for past lows.
It signals a major pivot.
Yeah.
And yeah, all the signs are now pointing strongly towards a rate cut in September, probably 25 basis points.
And companies that benefit from lower rates, like Open Door was the example used.
Right. Companies sensitive to borrowing costs, maybe also using AI effectively, they could benefit.
So what's the read-through on Powell's comments? What are they signaling?
It really looks like they're prioritizing the jobs market now. Leaning hard on that side of the dual mandate, perhaps because the labor market is showing signs of softening.
But what's the risk there? If they cut rates, but we don't get a recession and PMIs are rising.
That's the worry, cutting rates into rising manufacturing activity and an okay job market. You could just reignite inflation.
And there's debate about the cut size, 25 versus 50 points. And this idea that Powell might be bending the knee a bit to the administration's growth agenda.
That's definitely part of the chatter. You know, questions about Fed independence always linger, especially around election cycles or when there's a big push for economic growth. So this next decision, it's huge for your borrowing costs, potentially the housing market, overall economic stability. Are they steering us towards that economic golden age? Or, back towards higher inflation?
It really feels like we're at this incredibly complex moment. We've covered a lot this clash between exponential AI and maybe a backward-looking Fed, this surprising manufacturing comeback driven by hardware needs.
Yeah, and the implications are just massive for Bitcoin, yes, but also for your job, the markets, everything.
So, reflecting on all this, what's the big question we leave our listeners with today?
I think it comes down to this. You have this potential for a massive economic boom, this golden age maybe, driven by AI and big government spending. Can central banks, like the Fed, realistically stay independent in that environment?
Or will they inevitably get pulled into supporting those growth goals, even if it means letting inflation run a bit hotter than they'd like?
Exactly. And if that happens, what does it mean for the long-term value of your assets? How do you prepare and navigate what's coming?
That is definitely some serious food for thought. We hope this deep dive helped you connect some of these really critical economic dots.
Yeah, hope it was useful.
And if you enjoyed connecting the dots with us, you know what to do. Please follow, like, and share this deep dive with friends, family, anyone who loves getting those aha moments about the economy.
Absolutely.
And for more insights and analysis, make sure you're following What Bitcoin Taught Me on all the platforms: Twitter X, Nostr, Bluesky, Threads, Instagram, Facebook, LinkedIn. We're everywhere. Until next time.
Keep digging.